Have you ever thought about buying a house, but you just assumed you weren't ready because maybe you've heard this? You need perfect credit. You need 20% down or don't even bother buying the house. Maybe you've convinced yourself you've got to have tens of thousands of dollars sitting in your bank account before you should even start looking. The truth is, many first-time homebuyers in the Southwest Virginia area qualify to be able to buy a house much sooner than they think. Hey, I'm Andy Young with Cedar Realty Group, and I help people buy and sell houses from Bristol to Buchanan County and everywhere in between. Today I'm going to walk you through a dream homebuyer process, the exact blueprint I use to guide people through every single day when they're looking to purchase a home. By the end of this video, you'll know what steps to take and where you might be in your own journey of buying a house. And make sure to stay to the end because I'm going to share with you the biggest mistake I see first-time home buyers make. If you want more information about this, just go ahead and comment down below buyer, and I will send you more information that you can use to help you with your own home buying process. Step 1D, we're going to discuss your goals. So that's where we always start when we're looking at this home buying process. What I mean by that is I want to find out what is it you're actually looking for. Is it that you need a 3-bedroom, 2-bath that's going to be in Lebanon area? Is it that we're looking to be in the Bristol area because you're working at the casino and you need something convenient? Doesn't really matter what size that it is. Or, is it that you're more so seeking a monthly payment? Does it need to stay under $1,300 a month so that you feel comfortable because you've worked your budget and you've looked at everything and you said, man, if it goes past that, I just don't feel comfortable. How about room for kids or dogs? Does the yard need to be fenced? Maybe it's not fenced now, but you've got enough room in the budget that you could go ahead and fence it, and it's just made to where it's going to be comfortable for everybody. The goal is to find what is your ideal situation. It doesn't mean that it exists. I'm just trying to figure out and craft and see. Sometimes I'll have people that'll call into the office and they'll say, hey, Andy, I've got a manufactured home. I'm trying to find somewhere to set it. Where's land? Well, there's a lot of limitations when it comes to that. Maybe somebody says, I have X amount. I'm looking to buy this, but I need to have water hookup and sewer because they know that, hey, drilling a well, it might take a while and they need somewhere quicker than that. Or maybe it's just that they're saying, it's got to be 3 bedrooms. We can get by with a bath and a half. Would love to have 2 baths. If it's all on one level because we want to be on the same level of our kids, we don't want them climbing up and down steps. If it's got a basement, cool, but that's just kind of more so for storage, not that people are going up and down to be able to go to bedrooms. Now, this step we handle before we ever are looking at listings on Zillow or Redfin. I'm sure that you're already crawling through it, but we want to be able to figure out what it is ideally that you're searching for before we get involved in the process. Number 2, we're going to review your financing. So that's the R in dream, right? We want to review your financing. Are you paying cash, or are you going to be able to go to the bank, be able to see what you qualify for with a mortgage, different funding opportunities that are out there. This is where a lot of people miss the entire picture, right? They think that, okay, I've got to have 20% down. There's a lot of programs in our area that allow you to be able to purchase a home with as little as 0% down. Now, that's going to open you up to some other problems potentially as far as with what a house will appraise for. Kind of the normal that we see a lot around here is 3.5% down. So if you take whatever the number is, as far as if it was a $100,000 house, you need to have $3,500 down. $200,000, you need $7,000. So we look at that just to be able to get an idea of ballpark as far as what we need to be able to have saved. This is where if you don't already have a professional that you're working with to be able to qualify for that mortgage, I'm happy to share some resources, people you can reach out to that will not only see if you qualify, but if you don't yet, they can give tips and pointers to be able to help get you closer. So what's your debt to income ratio? All these things sound foreign, right? But it's looking at how much income do you have coming in versus the debt that you have that you're paying. And we want to just make sure that we're getting everything in line. As somebody that's worked in the financial industry for years, I look at this as far as the opportunity to be able to slow down and think rationally versus emotionally. As a realtor, I would love to be able to find a house for everybody, but sometimes it's just not the right time. If the money doesn't work yet, then we don't want to rush into it. So things like USDA loans, that allow that 0% down, FHA loans that allow you to be able to do as little as 3.5% down. It's just going to give you open options and opportunities to be able to get into a house easier. There's also programs that are going to help out with down payment assistance or closing costs, and you got to ask your mortgage professional about those things because not all of the people out there have access to all those programs. They have to participate in it so that it's even out there. So that's where we see just different things like Virginia Housing that are great resources to be able to help educate of what's out there. so that people can get into a house the most economically way possible. I know that was a whole lot that got thrown at you. You don't need to know every single financing option. What you need to know is what are the ones that you could utilize. So that's where talking to that professional is going to help, and that's why I provide those resources for people, just so that you can know who's somebody that I can trust that can tell me what are the options out there and what actually makes sense for me, versus me learning everything about the mortgage industry. I can kind of put that screen over it and look at it and say, okay, here's the 3 or 4 things that I know are important to me and that I can take advantage of. Time for E, explore the home strategically. Now, this is where we get down to the fun part, right? This is when you're actually looking at houses. This is where myself as a professional help narrow down so that we're not just looking at everything that it's like, hey, I saw a sign. I normally tell people, hey, if you see something that looks interesting, shoot it to me. I'll get more information for you. And that way we can see, does it make sense to even go out and see it in person? A lot of times we start to narrow stuff out that we're like, hey, you know what? This one doesn't have this one feature that you said you really want. Does that matter? If it doesn't truly matter, then we know that, okay, maybe that's not a kick out. But if it is something that's a deal breaker, then we've got to go ahead and just know that, hey, we don't need to take our time going out and see it, because even if it has everything else that you might want, it might be listed as a 3-bedroom, 2-bath, but it's really a 3-bedroom, bath and a half, and that half bath is out in the garage, so it doesn't really work for your family as far as an option. You're having to go outside and then into the garage and use that bathroom. Everything's different for every person, right? We've got to figure out what it is that you're looking for. You know, what's the condition? What's the resale value? How far away is it from work for you? Is that realistic that if you say, I don't mind the commute, but it's a 40-minute commute and right now you're used to 15? We need to think about that, and logically it's kind of like, okay, well, let's see what that neighborhood feels like. Sometimes that we see that there might be things that are getting towards the end of their lifespan. So heat pumps, roofs, those are expensive, right? So it's good to know the age of those systems whenever we're looking at a house. So not just like we walk through and we just emotionally fall in love with the house and we're like, oh man, I can't wait. I'm there to be able to make sure that, what are we looking at? What are the kind of the checklist items that we need to? That's why a lot of times that we'll see people go out 2 and 3 times to that house just to really narrow it down. Now, unfortunately, the market that we're in right now, if those houses are exactly what you're looking for, they go quick. So we have to be able to get from looking at the house to making that decision quicker than a lot of people want to. We just want to make sure that we're realistic about that expectation. And that's part of what we would talk about before this, is just, hey, I'm not going to rush you. I'm not going to say that, hey, we need to sign papers right as we're walking through. But if this house is checking the boxes for you, if it's doing everything that we want to, if it's in the right place, if it's in the right condition and it allows us to be able to do everything, then maybe we need to seriously consider looking at writing an offer. Now, one of the advantages of working with someone like me is maybe you're not from the area. Maybe you don't know the difference between living in Lebanon and Abingdon. You just see the home price, right? When we see the difference in the region and just kind of the feel of the towns, you can see a very, very big difference within just a 10-minute drive. So we want to make sure that we're aware of that and that we're being able to explain that when you're out looking at houses. If you are from here, then you might already know, hey, I absolutely will live in this area. I absolutely won't live in that area. So we just make sure that we run that through everything that we're looking at. Maybe school systems are important. I know for one family that I've worked with, it needs to be within a certain exit range off of 81 so that they stay within the school system, that they're seeing the same people, that they're used to that, and that continuity's there. If we venture outside of that, it might be a whole nother process for people being able to figure out, and for those kids just to get their mind wrapped around. Now, A, agreement and negotiation. This is where we get down into where we really start to dig in. This is where we decide, hey, I found the house. I found the one. I want to write an offer on it. But we don't want to just write an offer. You'll see that when houses are listed, they have a price associated with them. So maybe it says it's $270,000 for this house. Now, that is the asking price. In our area right now, houses typically are going for around 90% of that asking price. You might ask why. Well, it's because a lot of times the person that's helping out with purchasing that home has helped negotiate that to be a lower cost for various different reasons. Maybe they just say, hey, we're building in that we know that we need to put that fence up. The HVAC needs work done with it. There's different things that we're going to need to be able to do and service, so we just don't feel that that price is worth it. The local market will tell us as well. So if we see other houses that have sold recently, and maybe they've sold for a similar amount or a little bit less, that we see what is the inventory that's out there and what has happened to it. It also comes down to yourself personally. Maybe you just got that feeling that you say, I know it's $270,000 that it's listed for, but I would like to ask for some different things to be able to help out with this. What are some things that you can ask for? Well, we can ask for concessions. That concession would mean that maybe we give them that $270,000 they're asking for, but we'll ask for help towards the closing cost. So maybe we ask for some of the money, instead of that $10,000 off of the price, we ask for $10,000 towards closing cost. You can use it towards the closing cost, or you could use it to help buy down your mortgage rate. So if we go back to that creative financing part there with that earlier, that would be part of the way that we can help bring down your payment, is if we buy down the interest rate. So this is where it all comes into working with somebody that helps know what's going on and how all of this is going to fit together. Now, it matters as far as what repairs you're asking to be completed. You can ask for a lot of different things in this. When you write this offer, you could ask to have the septic inspected. That's going to be at your cost. You could ask for a home inspection, somebody that's going to go through and verify all the systems work and any concerns that they might have. And you could ask for repairs from that inspection, and the person can or cannot do those. It's up to you if that is then a deal breaker. We could look for a water inspection, like for the well, to make sure that what the water quality is. So there's a lot of different things that we can look at that are built into our offer that make it more advantageous for them to take advantage of. Or it might make it to where they go, hey, they're really asking for a whole lot and they're asking for money off. I just don't think that this is going to be the one. So this is that dance of, we've got to be able to write an offer that's competitive, but also fair, to where what's going to work out for you and what is going to help your family in this moment. Now, after all of that's done, part of what's going to happen if you did get a mortgage that's going to be part of this process, they're going to complete an appraisal. That appraisal is going to be able to verify that that house is going to be worth what they're lending to you. I have had it come up before with a smaller house that with that one, it appraised for a little bit less than what we were offering. So because of that, we had to come up with more money to be able to fund this so that they could still get the house. It was about a $6,000 difference. That's a big swing. If you're expecting that $6,000 to go towards buying furniture and doing different things, if all of a sudden now you've got to come up with it just to be able to complete the purchase, because if that other party, the seller, isn't willing to come down by that $6,000, the bank just says, this is the maximum we're lending. We'll only lend what the house is worth. And this is one of those unknowns. We don't know when that appraiser walks through what they are going to determine that value is. We've got a good idea. That's the part of that local market of what we've seen. But this is where some things could come up. This stage is all about protecting your interest and be able to get you closing as quickly and cleanly as possible. Time to celebrate. Make it yours. Once inspections, financing, all that stuff's complete, well, that's when we're going to enter the home stretch and we're actually going to get you to closing. What is closing? Closing is when we go to the attorney's office, or we can do this online a lot of times with different parties with this. Your lender's going to give that final approval and say, yep, we're good, everything matches, you've got all your inspections done, we are ready to lend you the money. And the other person says, I'm ready to get the money from you. So you'll receive your closing disclosure. This is where it goes through line by line as far as what those fees and expenses are. So what's the recording fee with the county, any taxes, any of those different inspections you've already paid for. Those are all going to be built in on this closing statement. Think of this as your receipt, right? You go to the store and you get the receipt, shows everything that you got when you ordered your food. This is doing the same thing. It's just an itemized receipt to show all the money in and out. With that, we're going to do a final walkthrough of the property, and that's going to be where we just walk through and verify, is everything there that was there when we went through before. Think of if we took the house and we turned it upside down and shook it, everything that's attached should still be there and attached. Those curtain rods, those should still be there. If we look at the stove, the fridge, the dishwasher, those don't necessarily have to be there. It would be spelled out if they were leaving those. Washer dryer, I've negotiated before for a stack washer dryer to stay with the house. It's not bolted to the house, it doesn't have to stay with the house, and it wasn't in the listing. We had to negotiate that as part of that contract offering. So closing day, that's the day you actually sign all the documents, and this is when you're going to take possession of the house more than likely. I would say like 99% of the time, the day you close is the day that you also take possession of that house. So we're going to get your keys. Do recommend change those locks as soon as you get there, because we never know who has a copy. So we want to make sure that you are safe and secure in your new home. This is the excitement moment, right? Everybody celebrates with that. This is when you're posting on Facebook like, holy cow, we finally got there. We got the house. This is a huge deal. We want to celebrate with you. This is one of the biggest wins of most people's lives, is to be able to purchase that home. I can remember the first time that I purchased a home, it was a stack of papers, and I was like, holy cow, I've got to sign all that. But then you get to the house and you're like, you know what? This is mine now. This is something that I'm building equity in. This is something that I'm building a future in, and I can't wait. I can paint it whatever color I want. Inside, I can do whatever I want. This is fantastic. Time for those top 5 first-time home buyer mistakes so that you can avoid these, so it doesn't throw off your goal of being able to buy a house. Number 1, opening up new credit cards. We don't want to see new things that happen. Once you've entered in this process of you're trying to buy a house, this can totally upend it. We don't want you to be able to have this happen to you. Number 2, buying a vehicle during this process. I know that you're excited. Maybe you need that truck to be able to haul things back and forth, but wait until after closing so it doesn't affect that debt to income ratio or anything else with your loan buying process. Number 3, changing jobs. I know you might have that fantastic opportunity and you can't wait to take advantage of it, but we want to see continuity. We want to see that paycheck still remaining the same. If you lose your job, also important to say, because we don't want to commit mortgage fraud and all of a sudden say, yeah, we've got this income coming in. This is one of those things. You want to discuss it with your lender and be forthright with them if something happens. Number 4, making large unexpected deposits into your bank account. Guess what banks don't like? They don't like all of a sudden seeing things happen. Just this mattress money came out of nowhere, right? They need a trail for what happened and where this money came from. Otherwise, that mortgage not getting approved. Number 5, looking at homes before speaking with the lender. I talked about it earlier. We don't want you to fall in love with a place and then we realize, you know what, I really can't buy this. So we want to make sure that we're looking at stuff once we are approved or that we have the funds available for that cash purchase. Avoiding all these mistakes can save you a lot of stress and potentially a lot of heartache when it comes to buying a house. And lastly, the bonus number 6, the biggest mistake that I see, waiting. People wait because they don't know that they can already purchase. They wait because they've been given bad information. They wait because they've never actually spoken with a mortgage person to be able to see what do I qualify for or when will I qualify for something. This is one of the things that we see. It's a huge lost opportunity. You could be spending thousands and thousands and thousands of dollars in rent that instead could be building your own worth. We want to make sure that you're looking at this in the right way. When you delay doing this, you delay building a plan, you delay having a conversation with someone like myself that can help guide you through this process to the right people to answer questions, well, you're delaying the gratification of being able to turn the keys in your own new home. If you're thinking about buying a new home in the next few months or even in the next few years, shoot me a comment down below that says buyer. I'm happy to share this back with you so that you can watch this at any point in time. Also, happy to share information and resources that will help you on your home buying journey. I'll share this dream blueprint with you. It's something that I've created just to make it easy so that way it walks you through every step of the process so you know what's going to happen along the way for every single client that I work with, so that it's not the unknown of what's next. What do I need to be prepared for?